What's going on, YouTube? So, as you can see, I've been hard at work. I have a bunch of notes here. I'll explain that later, but let's get this started. So, I have stocks from number 32 all the way to 42, Aerospace and Defense. So, first up, TDG. I wrote good for pump and dump, and the debt is at 123%. The pump and dump, I wrote this is because the stock is swinging in one direction. I can't remember if it's moving up or down, but I believe from the markets and everything that's going on, I'm pretty sure this is moving down. So the reason I'm saying this is because the pump and dump is basically when they're selling first and then they're buying later. So basically on the way down, that's the profit that they make from the difference that happens. So basically, they sell first, buy later, and that's pretty much what's going on. And that's why they call it a pump and dump. So next up, CW. It's a small cap. You're gonna see this in a lot of the small caps. As you can see at the bottom for the portfolio, I didn't really add nothing to the portfolio, and I think I'm gonna see a lot of that because the markets are just getting crazy and we're in a bearish market. So, yeah, I can see a lot of small and mid cap companies that are not going to survive. And hopefully, large cap companies, when this thing is over, sooner rather than later, hopefully, then the large cap companies can buy out the smaller companies and, they can grow again. A lot of guidance is being cut, and we're in a negative market. Everything's looking bearish. I see that as an opportunity, but still, you want things to get better in the long run. So, again, I stated before, I try to do my evaluations based on the year. So basically, all this information presented in the back, it's I'm reallocating, and I'm doing this for the whole year. Yeah, I follow the quarterly reports, but again, yearly is also good as well. So this is going to be a negative year, whether we like it or not. I really don't think we will get a vaccine maybe till the end of the year or maybe next year, and that's just me being optimistic. The media is just reporting half accuracy, 50% truth, 50% lie. So you don't really know what to believe. We know that it's out there. It's a serious threat, and it's impacting people, companies, and businesses, and everybody globally. This is something to take seriously. So, moving on. Let's just say, okay, for the positive for this, I wrote great growth in all categories, but it might not survive. So again, something to add on the watch list, but again, not to the portfolio. You're going to see a lot of this. I'm not going to add hardly anything to the portfolio, and I'm going to go over this. So they're going to be less videos that I'm going to be making because I'm trying to reallocate my personal portfolio as well. But I'll still upload, but just not as many videos as I want to or I can. So next up, SPR. So I wrote the positive is that they have cash flow, and they have 1 billion in cash flow, but they might survive in 2020. So I mean, it's a chance that they might survive. They're a small cap, so basically they have 10 billion or less for market cap. Negative aspects on this, I wrote the debt. They're 77%. That sucks. So that's why this company might sell out and just do bad. They're definitely gonna do bad in the upcoming quarters. PE ratio 6.68. That's really, really low. And again, here in this section, I already put that they already cut the dividend. So last year, in all quarters, they were paying at least 12 cents a share. I forgot the price. I'm sorry I didn't list the price. But again, this is the most important. I have the tickers. and you could always put those letters, Yahoo Finance or wherever you want, or Google it, and then the prices and everything else will show up. So anyways, they were paying a quarterly payout of 12 cents. Now they cut the dividend to 1 cent. That to me is a failing business. So if you own this, sell it. Once they cut the dividend, that's it. I mean, either they're hitting the reset button, or worse might come to worse, and out of business. But like I said, they have good cash flow. So I mean, still, this is just something to keep in mind, and not even invest in it. But still, if you sell it too late and you find out about this video or see this ticker name later on in the upcoming months, they still have enough cash flow, so still they'll survive probably till the end of the year, I'm assuming. So yeah, that's about it. Next up, AAXN. Positive things to say. I have nothing good to say about this. Awful cash flow and metrics. I'm predicting this company is going to go out of business this year. AAXN. Next up, MOG-A. I wrote they're backed by the government, which is a good thing. But the government and federal government, U.S. federal government, they're struggling right now. So again, negative aspect, I wrote they might not survive in 2020. People are putting less trust in the government. There's just a lot of chaos going on right now, so it's just not a good thing at all. Next up, MOG-B, same as number 36, which is their previous, this is like the older brother, and this is like the younger brother. So B, the younger brother, basically, they're even worse. They have no volume, which is, there are no buyers, and there's basically nobody online buying shares or a certain amount of shares. No volume, like people aren't buying this at all. Oh damn, my light is running on my red laser. I might have to do something about this. Buy new batteries. Let's see, yeah, batteries are low. Okay, so next up I have Boeing. Number 38, BA. Earnings per share, we'll do it like this then. Earnings per share, negative 1.8. Then the third quarter from 2019, they failed miserably. Boeing actually has a $53.61 billion market cap, but they dropped dead this year. Like they're waiting for the flying nails to land on the coffin from their airplanes, because I don't see them surviving this year. I'm sorry to say, but that's my final result of the Boeing. The debt is 142 billion. They're in debt, so that leads to a 106% rate. Their PE is negative 130.2. And again, I predict they're going to go out of business this year if things keep up the way it is. Next up is TXT, number 39. I have 444 million in cash flow, and the earnings per share is 3.5, and they have 815 million. Is that cash? No, I'm confused at what I wrote there. I'll figure it out. So, anywho, the positives, they beat their earnings and they might survive 2020. So, they have good metrics. They're not high in debt, so they're not too bad. I added them to the watch list, TXT. So, next up, ATI. So, they have 30 mil in cash flow. And they have the negative aspect of the debt needs work. They have at 61%. I definitely see that as a bad trend. And as even before the coronavirus, I've always analyzed my companies with very, very low debt and cash flow anyway. and a good balance sheet. So again, now when I say I'm reallocating, what I'm saying is that I'm trying to still find good companies in more sectors, like in more in other businesses and other lines of businesses that are still doing well or are going to do well. So that's what I'm doing right now, trying to add to my portfolio and just trying to build the dividend portfolio, and hopefully cash comes back, and I think I'll do a good job. I mean, I'm not worried about it. So uh, this thing is not gonna last forever. This virus is not gonna last forever. So pretty sure we'll push forward and do fine. So again, debt needs work at 61%. So they got work to do. So yeah. I didn't watch list them or anything, but yeah, I mean, it's just non-existent. They're not important to me. So next up, AIR. The good news is that they have good metrics. The bad news is that they need to work on their debt at 47 and a half. So yeah, they probably, when I say good metrics, so again, they beat their earnings for the year, or probably did majority of the year of last year, 2019, where they beat the earnings. They're doing pretty good, and still, they just need to work on the debt. Debt is like the main enemy for everything right now. Every company's like pretty much in debt. Well, a lot. Again, a lot of companies. When I say a lot, I mean the majority. So yeah, that goes for small caps, large caps, any cap. So yeah. Next up, CVU. Good company, and they might not survive in 2020. So this is like a 50-50 chance. I couldn't put more info here, but again, I added them to the watch list. I didn't put that they were in debt. If they were in debt, I would have stated that. So they're not in debt. That's a good thing. So we'll see. We'll see how they do. I did not add them to the portfolio, but it seems like they will do okay for now, and it would just be eyeballing it and see how they do. And that's pretty much it. That's all I have for you. I'll explain all these other sheets in another video right now, and hopefully you got something out of this. Again, this is not investment advice. This is just a review, and